There's a lot of videos out there that talk about why real estate is the best investment or why the stock market is the better investment of the two. Well, historically, considering the long term, that is, periods of at least 10 years or more, the winner for all investments has been with equities, otherwise known as the stock market. Now, there's no reason why you can't invest in both real estate and stocks. I encourage most anyone in real estate, and by that I mean those who work with buyers and sellers, listing and selling, or anyone involved with the rental real estate market, to start building up their own portfolio of property. It can start as simple as buying a 2 or 3 unit building and living in one of those units for a few years, and then moving on to another, as long as the rental income supports the mortgage, taxes, insurance, and maintenance. Then you'll have a good portfolio of property in a span of just 10 years. That could actually be your retirement, especially since Social Security becomes less and less reliable 20 years out and more. Of course, there's lots of variables. This video is about how you can turn $800 into $8,000 by just following some basic guidelines, and you might actually even have some fun with it. And of course, keep in mind that all investments in the stock market as well as real estate have inherent risks. Now, the $800 should be money that you're willing to risk and not part of your immediate needs for food or shelter or even your next loan payment. Now, I personally have a few brokerage accounts with names you've most probably heard of and seen for years, but I also maintain a Robinhood account. The Robinhood account is an easy-to-use, free app that you can download, and it's been doing great for me for nearly 3 years. The nice thing about it is every trade you make is free. There's lots of people who have negative things to say about it, but that applies to everything in life. You can't beat free for what we're trying to accomplish here. I've run into a few stocks, as a matter of fact, that it won't allow you to trade. But for the most part, you'll be able to trade the majority of U.S. equities that you see every day on CNBC. Now, once you download the app, follow the instructions to get your $800 transferred into the account. Again, it's perfectly safe, and I've never had a problem with it. And they don't pay me or give me any referral fees to promote them. While you're waiting for your account to be approved and funded, it's a great time for you to start looking over some stocks that you might actually want to invest in. I'd like to share with you some of the rules that I highly recommend you follow, that I follow myself in order to minimize your risk. Number 1, don't chase stocks. If you see a stock going up fast and it's been running all day, more often than not, you'll miss the bus and it'll dip, then you'll panic, and you might even want to sell. So don't chase. Number 2, never buy first thing in the morning. The market's open at 9:30, and if you're able to look at the pre-market action, you sometimes get a feel for what's going to happen the rest of the day. But I found that this isn't always super reliable. The best stocks that I've bought over the years were the ones that started going up, then took a little dip mid-morning, and that's usually between 10:30 and 11:45 Eastern Standard Time. This is usually the time to purchase when that little dip occurs. I like to look at trends with a stock by checking out Yahoo Finance. And there's a lot of information available to you, and it's pretty easy to navigate as well. Number 3, download some stock chat rooms where other investors of all sizes participate in. StockTwits is a pretty popular one, but just Google free stock trading chat rooms and you'll see which ones work best for you. You can click on tabs that show what stocks are trending and what the experts, and I say experts in quotes, what they say are hot and not. You'll also find that there's a lot of pumpers on there too. And they might say great things about the stock, but not for the right reasons. Maybe they paid too much for a stock and it dropped, and now they're hoping by hyping it up, you'll buy some of it and influence the price. Or they may be trying to short the stock, and by talking bad about it to get you to sell when in fact there's really nothing bad happening except that they have to cover if the stock goes above the price that they shorted at. We call that being bearish, when you think a stock will go down. And the opposite of bearish is bullish, when you think the stock will go up. Number 4, don't buy a stock if it's a couple of days before the company earnings are to be reported. There's a lot of uncertainty, and I personally have not had much luck under these circumstances. Number 5, invest in companies that are making money and have been around for many years. Legitimate companies. You'd be shocked at how many companies have negative cash flows or very few employees. All of this information is available on Yahoo Finance. In addition, look for purchases of stock by management of the firm. They call this insider buying. When you see the CFO or a few directors buying thousands of shares, think about it. Why would they want to invest if they didn't feel like something good was coming down the pipeline? But the converse is true too. If they're dumping a bunch of stock, what do they know that's going on the inside that we don't know on the outside? Also, look for institutional buyers. They buy in large blocks and can really influence the price of stock. Number 6, look for a catalyst. That's something positive that will drive the stock higher, such as FDA approval of a drug, or a license given by a foreign government to a U.S. firm to do business there. Maybe a press release that oil was found by a gas and oil exploration firm, or the firing of a mediocre CEO, the buyout of one company by another. And keep in mind, when a company's being bought out, it's usually the price of the company being acquired that goes up, not the one doing the acquiring. That's not set in stone, but it usually happens that way. So you get the idea. Number 7, don't do anything in the stock market if it's full of negative sentiment. If war breaks out, if the president was shot, if a major industry just failed, like back when lots of banks failed and then the government had to bail them out, it's just too risky for the novice trader. Keep in mind that the stock market doesn't like uncertainty. Another time when to avoid the stock market is when the Fed meets to talk about interest rates. Just sit on the sidelines and let the dust settle. During the presidential election and the weeks leading up to the November vote, the stock market was a mess. So now, all of this should take you 3 to 5 days for your Robinhood account to get funded. Next, you want to go to Yahoo Finance and click on Market, then Gainers. What I like to do is look at the stocks that have upward trends. I'll watch them for a couple of hours, see if they pull back a bit during the normal mid to late morning, and then start going up. Look in the chart column to identify patterns like this. Then, look to see how many shares have been traded and what's normally traded like this. Never ever buy stock if the activity is typically less than 600 or 700,000 shares a day. I don't care how much activity it has on the day that you're looking at it. And the activity on the actual day you're considering buying it, assuming that everything else is coming together, better be at least 75% of what the typical shares traded are per day, or significantly more. Something like this. Another pattern I like to look for is that it's steadily going up. Here's an example. This is based on the predictive premise known as technical analysis, and people have debated it for years as to whether it works or not. Technical analysis basically says that you can look for patterns in the past behavior of a stock combined with the basic tenets of human behavior and predict where the stock is going to go. Now here's where you can get greedy, and I highly discourage it. If I'm day trading and I can make $45 or $50 3 times a week, because with day trading, you're limited to 3 transactions within the same day within a 5-day trading week. You can take 3/4 of your available funds. For example, suppose you start with the $800 that we're recommending. Take 75% of it, or $600. And if you invest in a stock that's, say, $225 a share, that'll get you 266 shares. So if it goes up just 25 cents, you've made $66.50. So by using Robinhood, there's no commission buying or selling. All the money is yours. If you consistently trade like this, you should easily be able to turn your $800 into $8,000 within a year. And if you don't have the time to do this every week, you'll still make more money than if you put it in the bank. But you have to make time for it and don't deviate from any of these rules. In addition, if you spend some time and learn how to read charts and do some technical analysis, it can even get more interesting for you, and your accuracy will increase exponentially. And before you actually try this, I strongly encourage that you download a free app that will allow you to practice trading using these basic concepts I just suggested. They're absolutely free, and it uses real-time information. It's a great way to practice trading using these basic concepts we just suggested. The basic rules that I've suggested for you have worked for me for years, and if you have the necessary time available to actually invest in the stock market, you can actually make some good money. So good luck, and let me know how it goes. Thank you so much for watching. If you found the information helpful, we'd really appreciate it if you could like this video and click subscribe.